2.5 years, 3 years ago when we were setting up our regional development programme, I didn't even know what a CDFI was. We spent some time in the United States learning from others about their impact investing programmes, and that was where we first came across CDFIs as an entity. And it was clear that the ecosystem that's developed there over 4 or 5 decades has created something extraordinary. And the market for enterprise lending there is deep and broad, and institutional investors now lend to CDFIs on typically commercial terms. And we challenged ourselves to think about why, if such a model was so successful in the States, why was it not as big and successful in the United Kingdom? And over time, as we were introduced to other CDFIs in the UK, it became clear that one of the gaps that needed to be addressed was wholesale finance. And whilst some of the social banks had already crowded in some capital, which was much needed and is to be absolutely applauded, it was clear that there had been no mainstream lenders present yet to develop the market even further. And we felt this was just a great opportunity to find a way to divert more lending to SME customers who typically may not make it through Lloyd's front door, but could get looked after really well by CDFIs. So we were really keen to find a structure that could demonstrate to others how mainstream lenders could lend safely into what is still an emerging, nascent but very important sector. And the feedback that we had talking to other CDFIs was that there weren't appropriate structures in place yet to help capital scale over the medium term. And what was presented by CIEF 2 struck us as being a very sensible, well thought through structure, which could first of all create some impact, which is most important, but secondly demonstrate to others that there's a potential to lend and lend safely. We are at this important crossroads where we're not at the stage that the United States is, of course, where you've got rated CDFIs, where wholesale capital can flow relatively easily. We need to nurture this and grow it carefully over the next 5-10 years to hopefully get it to a position where it can rival what's been happening in the United States. So the CIEF structure appealed to us in that way. We were very excited that it could stand as an important demonstrator to others. And of course, with the news today from the British Business Bank, which is fantastic, we see yet another opportunity for a parcel of junior funding to come forward for senior capital to allocate itself to over the next 2, 3, 4 years, and hopefully continue to scale the sector at pace. The news today of the British Business Bank's community enablement funding is superb. This is a huge milestone for the sector and something that we've been calling for the last 18-24 months. In order for this sector to scale competitively and at pace, we need a recyclable source of junior capital that can encourage other mainstream lenders, not just ourselves, but others in, and hopefully magnify the contribution that we're all very, very keen to make. So I think the BBB news is fantastic. Coming alongside JPMorgan's philanthropic contribution, we've also made an announcement today about our own commitment from Lloyds Bank of grant funding to the sector. Today really is a good news day.